There are certain principles we are having. According to that principle, you have to make the cost. There are two parties. One is called the contractor, another is called the contractee. The relation between the contractor and the contractee is called contract account. Machine hour rate is a total machine hour expenses divided by total machine hour. Very good morning to one and all. I am Dr. B.S. Subramania, Professor in Commerce and Management, Vidhyaashram First Grade College, a Temple of Excellence, MYSURU. Today I am going to discuss Model Question Paper March-April 2021 regarding Advanced Cost and Management Account Session 1 in favor of 5th semester BCom. I will discuss the question paper inch by inch. What are the questions that will become, how to answer in the question paper, the coming examination, how to make the answer. I will discuss today. I will discuss the 10 marks in this session. I'm going to discuss about the 10 marks. In the next session, we'll deal with the 15 marks practical question. Regarding the theory, I will give the points how to write the examination. So, I am discussing a question paper of the last year, March-April 2021. We'll move on. So, this is the part A. We'll ask. So, 6 questions, you have to answer any four you have to answer. Each question carry 5 marks, 20. Second, we'll ask 5 questions, you have to answer any 3. Each question carry 10 marks as per the university norm. In the final section C, we'll ask about the 4 questions, you have to answer any 2 practical, 15 into 2, 30. Totally 80 marks. So, a student has to score a minimum of 30% of 80. Totally 40 marks. 30% of 80 paper minimum is required. Then, we'll move on. Answer the following question, 5 marks question. So, I will give the hint of this question. Write a note on generally cost accounting principle. There are certain principles we are having. According to that principle, you have to make the cost. What is the cost? The total expenditure of a product is cost. There are certain rules to be followed for a manufacturer and services in order to find out the cost sheet. What is cost sheet? It is a direct material, direct labor, direct expenses, the prime cost, add factory expenses, factory cost, add office and administration is a cost of production, add selling and distribution expenses is a total cost, add profit, that is the selling price. So what the generally writes us know, there are certain rules and follows now. According to that rules only, we have to follow the cost sheet. Even the stockholder and the manufacturer and services will follow the rules and regulation. This goes in favor of this. Then write a note on joint products and byproduct. When you are doing the process costing or when you're doing the manufacturing, we have got a word called joint product. Joint product is the same, nothing but whatever the main quality comes, same type of product will become out. That is called the joint product. Along with the joint product, then byproduct, along with the main product, another side product we are going to product, that is called the byproduct we say. Joint product has got the same quality, same quantity, same weight, everything will be same. But along with the main product, one product will come, that is called the joint product. It is about the byproduct is come along with the main product, sub-product, another product is coming on. For an example, for hydrogen, the byproduct is nascent hydrogen, we say. So, along with the main product, another product will become out, that is called the byproduct is considered. I am giving only touch of the subject. You go through very deeply because 5 marks question. Just I will give the hint. Then, what is escalation clause? This word is most important here. So, in a contract account, there are 2 parties are there. One is called the contractor, another is called the contractor. Who are the parties are? One is the contractor, another is called the contractee. Contractor going to execute the work. Contractor is the owner. So, before starting the construction, there is an agreement between the contractor and the contractee. What the contractee says, no, I will construct your building if the material cost, and the labor cost remains the same, it will cost about 40 lakh. Total construction reaches the 40 lakh. Only condition is if the material cost and the labor cost remains the same. By chance, due to cost of living index, if the material cost and labor cost increases, what's the construction cost also goes more another 10% or 15%. So it's an agreement between the contractor and the contracting. The main says no, if the material cost, if the labor cost remains the same, the cost of construction remains the same. If the material cost and the labor cost goes more, naturally the cost of construction also goes more. So it's an agreement between whom? Contractor and the contractor for the construction. Who is contractor? When we execute the work. Who is contractor? The owner of the building. That is we say. Then write a note on activity-based costing. This is a new one. So far we have traditional costing. Now we enter into activity-based costing. It's also considered as ABC. Activity-based costing. In activity-based costing, we introduce a new one. Whereas in here, we have got two. One is called traditional base, one is called activities. Traditional base is an old one, whereas ABC is a new one. And here, in the traditional, we are going to find out machine hour rate is total machine expense divided by total machine hours. So that is MHR, we say machine hour rate. But in activity-based costing, it is not so. Here we are going to calculate the three one. One is machine hour rate, then setup costing, order costing. What is machine hour rate? Total machine hours, total machine expenses divided by machine hours. Setup order, total setup order expenses divided by number of setups. So order, total number of order expenses divided by total number of order, then each one will find out the cost of the article. Whereas in the traditional method, you include all the expenses divided by machine hour. Here in the active-based costing, it is not so. We divide into three groups. One is MHR, another is a setup costing, another is the order costing. Three we are going to. Which are the three? One is MHR, machine hour rate. Second is setup costing. Third is order costing. What is machine hour rate? Machine hour rate is a total machine hour expenses divided by total machine hour. Machine hour expenses divided by total machine hour. Setup cost, total setup cost expenses divided by total number of setup. Then regarding this order cost, total order cost expenses divided by total number of orders. So that goes in favor of ABC. In favor of traditional, it is not so. All expenses will be, all overheads will be added, divided by machine hour. So it's a whole with all the overhead expenses will be added, divided by machine hour. In the active-based costing, it is not so. Only machine hour expenses one side, setup expenses one kind, ordering cost expenses. So separately we do, that is called active-based costing. I had given a hint, but it's a good thing here. Then in 5 marks question, we are going to ask one question called, this comes in operating costing. Calculate total passenger kilometer from the following. Products say number of buses, number of days, number of trips, distance traveled, capacity of each bus, normal capacity carried is 80%. So here the formula is, I will write the formula. Total passenger kilometers, total passengers kilometers, number of buses, multiplied by number of days multiplied by distance traveled multiplied by seating capacity. What's the formula? Total passenger, 5 marks for, definitely it will come from the examination point of view. What's the formula you are going to write? Number of buses, number of days, distance traveled, seating capacity. I will repeat, number of buses, number of days, distance traveled, seating capacity. We'll go through the problem now. Number of buses are 4. Number of days is 30. Distance traveled. So 4 up and down. 4. It is a 40 kilometer, going 40, coming 40 means 80 kilometer. How many trips? 4 trips. Going 40 kilometer, coming 40 kilometer, 80. How many trips? 4 trips. Then seating capacity 50. Occupied only 80%. So this is equal to 4 into 30 into 4 into 80. 4 trips. So going and coming, 80% of 50 is 40. So multiply this. 4 into 30 into 4 into 80 into 40. It will come 15,36,000 passengers kilometers. If we do like this, now we'll get the 5 marks for this. For formula, number of buses, number of days, distance traveled into seating cap. Definite problem, the definite problem 5 marks. We can easily get number of buses. See that number of buses, number of days, distance, 4 trips, 1 trip going 40, coming 40, totally 80. How many trips they make? 4. Seating capacity 50, but occupied is only 80%, means 40 passengers. Totally it will tally in a month 15,36,000 passenger kilometer. Hope you understand. We'll move on to next one. Another fine. So in the examination, no, they will give the name printing press. You have to mention which type. Printing press will come under job casting. If you write like this, you'll get the 1 mark. This is job casting. Oil refinery will come under process casting. First one, printing press, job casting. Oil refinery, process casting. Number, cinema theater, operating casting. One mark each. Then, one by one, printing press, job casting, oil refinery, process casting, cinema theater, operating casting. So, motor industry, multiple casting. Multiple casting or unit casting, you can say. Then building construction, contract casting. So printing press, job casting, oil refinery, process casting, cinema theater, operating. Just mention the name, that's all. Different types of casting. Motor can be, it is called multiple casting or unit casting. You can say that. Building construction, cost account. So 5 marks. So easily we can get the 10 marks. 5 marks for that problem, 5 marks for this theory. Now we'll move on to question paper, 10 marks question. Then what is process casting? Difference between process casting and job casting, that we have to reason. Then you have to say that what is process casting, what is it. Then state the reason difference between profit as per cost statement and profit as per the finance. So in examination, they will give the profit as per the cost account. They will give the profit as per the financial account. You have to mention there are some incomes which are only the financial accounting. I will tell you, dividend received, interest received, interest on bank deposit, only in the financial account, no effect of profit and loss account. There are some expenses which affect only financial accounting, that is bad debt, goodwill written off, then delivery expenses written off, then interest paid, commission paid, only in the financial account, but no in the costing account. So there is a difference between the cost account and the financial accounting. I will give an example. For example, if the work expenses in cost account is 8,000, CM is cost account, FA is 7,000. Cost account charges how much? 8,000. Financial charges 7,000. Who charges less? Financial. When you less charge, more profit, more charge, less profit. Who charges less? Financial. Their profit will be more and costing profit will be less. To make equal, we'll add back 1,000. So more cost, profit will live. Who charging more? Cost account. Their profit has been reduced by 1,000. More profit in financial account. To make equal, what we'll do? We'll add back 1,000. So that way we are going to make the reconciliation that can be dealt in the problem while you're doing. So we'll move on to problem now. So this is a construction of a problem. See that Sharma Construction Limited undertook a contract for rupees 25 lakh. The information is provided as follows. Then we'll go to the question paper problem one by one. I will take the question paper. Same thing is there. So one is material at site 1 lakh. It will come on the credit side. So it's a contract account. In a contract account, we are doing 1 year contract. Whatever the difference comes, that is profit goes to contractee. There are two parties. One is called the contractor, another is called the contractee. The relation between the contractor and the contractee is called contract account. Whatever the price fixed by the contractee to contractor to contract is called contract price. If you go this problem, Sharma Construction Limited undertook a contract for rupees 25 lakh. So the contract price is 25 lakh. The information is provided. So you have to prepare an account called contract account. Here, material at site will come on the credit side. Wages paid will come on the debit side. Outstanding wages will come on the debit side. Material issued will become on the debit side. Architect's fees, all the expenditure will come on the debit side. Plant issued will come on the debit side. Material returned to store will come on the credit side. Other expenses will come on the debit side. The contract was completed on 31st December and the contract price was duly received. Plant is to be depreciated by 15%. What's the value of the plant? Issued here, plant issued is 22,50,000. On that, we have to calculate the 15%. I'm going to explain now one by one how to write in exam. This is for 10 marks. How to write? First one. Which one? Sharma Construction Company. Sharma Construction Company. First, you have to write the name. Then, for the year ended, have they mentioned the year? See that only 31st December, they have not mentioned the year, 31st December. Then contract price, you have to write like this. Contract price is rupees 25 lakh. Draw a line. We'll go. All the expenditure will come on the debit side. We'll go one by one. What is the first one? Material at site. Buy material at site. What's the value? 1 lakh. Then end of the year, wages paid 4 lakh. To wages 4 lakh. There is an adjustment is there. Then what's your outstanding wages? 50,000 plus outstanding 50,000. It becomes 4 lakh 50,000. So this over, this over, this over. What is one? Material issued is an expenditure. Material issued. What's the value? 6 lakh. Then this over. Then architect's fees is an expenditure. architect's fees. What's your architect's fees? 10,000. What is next one? Plant issued. Plant issued 2,50,000. Material returned to store by materials return to stores by material return to stores by material 50,000. Then other expenses, 1 lakh. Other expenses 1 lakh. Plant depreciated by 15%. What's your plant value here? Working out if you want. Plant value 2,50,000 minus depreciation 15%. 2,50,000 into 15 by 100. 2,50,000 into 15 divided by 100. 37,500. Deduct 0, 0. This is 5. This is 2, 1. 5,12,500. So this is 2,50,000. 2,50,000 minus 37,500. So 2 lakh. This is 2,12,500. Come back here. Plant at the end. Plant at the end. What's the value plant at the end? 2,12,500 by contract. We say that by contract account, contract price 25 lakh. 1 year contract, no? This way you have to do it. So you have to add 1 by 1 contrast price. We have to make the contract. I will take the question paper. I will see that question paper will be worked out here. 1 by 1 will work out here. We'll work out the question papers here. I will take the question paper. So question paper says 4,50,000. Everything is there. Add the figure. So material at site is there. What's the total now? This is 25 lakh. 25 followed by 50 plus 2,12,500 plus 50,000 plus 1 followed by 50. So 28 lakh 62,500. 28 lakh 62,500. 28 lakh 62,500. Then we'll bring out the difference. Minus 4,50,000 minus 6 lakh minus 10,000 minus 2,50,000 minus 1 lakh. So 14 lakh 52,500. 14 lakh 52,500 to profit and loss. This is profit to contractor. 1 year contract. So I will explain now. So wages paid 4 lakh, add outstanding 50, it become 4,50,000. Material cost 6 lakh, architect's fees 10,000, plant issue 2,50,000. We have separately calculated this. Then other expenses 1 lakh, material at site 1 lakh we got, material returned to store 50,000. Plant we already calculated. What's the plant value? 2,50,000 minus 1537. It will 2,12,500. So it's the beginning of the year. This is the end of the year. The contract has been completed in 1 year, so they are going to pay how much contract fees? 25 lakh. Whatever the difference comes, that goes to contractor. Then what they ask, no question. Then contract account. Then contract account. Date, particulars, amount, date, particulars, amount. So they are not mentioned the date now. We can say that date is 31st December. By bank. What's your contract price? 25 lakh, 1 year, no full amount. 25 lakh. Come back here. 31st December. To contract account. In contract, we are writing contract account. In contract, we have to write the contract account. 25 lakh. This goes easy now. 10 marks. So anybody wants to pass the journal entry? Entry is bank account data to contractee. Here contractee bank account data. Who receives? Contractor receive. Contractor prepare the contract account. He receives how much? 25 lakh. From whom? Contractee. So entry, the contract is nothing but the owner. Entry, bank account data to contract account. In contract account, it will go in favor of the contract, because in contract, no, we see that in contract, we say contractee account data to contract account. This is your contract account. See that what we have written? Same. Contract account here, no? Here. Contract account data to contract account. In contract account, we write the contract account. In contract account, we are going to write the contract account. Problem is over. We'll move on to next one. This is called process costing. So another 10 mark simple question they ask. So product anugraha is obtained after it passes through two distinct processes A and B. The following information is available from the books of Sri Murthy Industry. So first we'll do the process A. Process. A product has to pass A and a product A, and we can say process A and process B. The output of the process A become the input of the process B. The output of the process A will become the input of the process B. I am going to explain. Now we'll move to process A. Process A. I will explain now. You have to write particulars, units or tons, value, particulars, units, value. Then what's the input they are putting now? Here 1000 they are putting. What's your output? 830 units. So you write here input 1000 units. What's your output? 830 units. You have to write an exam like this. 830. So all the expenditure will put on the debit side. Only normal loss, abnormal loss, closing balance, which will be transferred next process, will write on the credit side. We'll move on to problem. What is the first one? Material, you have got how much? 1000 at what rate? 250. Two materials, 1000 units. At what rate? At rupees 250 per unit. How many materials you are introducing? 1000. At what rate? 1000 into 50. So this is 1000 into 250. It will come to 25 lakh. So it will come to 25 lakh. 25 followed by 50. 25 ones are followed by. So 25 lakhs it is there. Then we'll go to expenditure. What is next one? This over, this over. Then wages, 56,000. This over. Then manufacturing expenses, manufacturing expenses, manufacturing 16,000. Then in a normal law, it is ascertained that in each process normally 5% total weight is lost and 10% is scrapped. So 5% total weight lost, 5% weight lost, no value realized. So 5% of 1,000 units. So 1,000 into 5 by 100. This is 50 units, no value. 10% is scrap, says 10% scrap. So 10% of 1,000 is 100 units. 10% of it is 100 units is there. So per unit is going to be realized here respectively 160. 160. 100 into 160. 16 ones are 16 followed by 30, 16,000. So this is here. We have to do the working note now. Slowly we can do this. We'll go to next one. Working note. Number 1. Particular units. Total input 1,000 units. See this? What's your total? 1,000 units minus weight lost 50. It come 950 minus scrap. It is minus scrap is 100. It is 850 standard output or normal output. So you introduce how many units? 1,000 units. How many weight lost? 50 units. Then 950 is there. How many scrap? 100 units. What's the standard output? Normal output is 850. But as per the problem, actual output is 830 minus actual output is 830. The difference is 20, which is called abnormal loss. So your standard is how much? 850. Less than 850 comes abnormal loss. More than normal output. More than normal output gain. Less than normal output loss. This is working note number 1. Working note number 2. Total expenses. Total expenses comes 25 lakh plus 56,000. 25 lakh, 25 followed by 50, 1, 2, 3, 4, 5 plus 56,000, 56 followed by 30 plus 16,000 followed by 30 is 25 lakh. It is 25 lakh 72,000. So normal cost is this is 56,000. So 25,000, 56,000, 16,000. So 25 lakh. So 1,000 into 250, 1,000. So the material is 1,000 units at rupees 250 is 2,50,000. Your wages or labor cost is 56,000. Your manufacturing expenses is 16,000. Add the figure 2,50,000 plus 56,000 plus 16,000, 3,22,000. This is 1000 units. So your expenditure is 3,22,000 minus amount realized what's your amount realized? 16,000. So out of 3,22,000, 16,000 you are going to realize means it is 3,06,000. So this is called normal cost. Then working note number 3, value of abnormal loss. Formula: normal cost divided by normal output multiplied by abnormal loss units. What's the formula? Normal cost divided by normal output multiplied by abnormal loss units. So what's your normal cost? 3,06,000. What's your normal output? 850 into abnormal loss is 20. We'll apply now. So 3,306 followed by 30 into 20 divided by 850. It will work 7,200. What's the value? 7,200 is the value. We'll put the value for abnormal loss. How many units? 20 units by abnormal loss 20 units. The value goes to 20 units. The value goes to 7,200. So bring out the reference. This is 1000 units. This is 3,22,000. Then, so 150, 170 means 830. Deduct 3,22,000. Deduct this. 3,22 followed by 30 minus 7,200 minus 16,000. 2,98,800. 2,98,800 transferred to process B. The finished product. So whatever the finished product comes, that becomes the input for the next process. The output of the process A becomes the input for process B. So these are all the expenditure we are going to make. This is the weight loss. This is scrap which is going to be realized now. So here your abnormal loss is 20. Your actual output is less than the normal output. Normal output is 850. Actually is 830. So there is a difference of 20. Realize 7,200. So difference is 830 is the output. That becomes the input for the next process. It is 2,98,800 transfer entry. Transferred. Then process B. Particular units value, particular units value. Now input, your output is input now 830. What's your output? 780 units. Transfer entry to process A. Transfer entry. How many units? 830 units. What's the value transfer? 2,98,800. 2,98,800. Now, we'll have an expenditure for this. Second expenditure, we'll go to expenditure for these. Come back here. 70 rupees now at the rate of 400 to materials, 70 units at rupees 400. See that? 70, what rate? At rupees 400. So 70 into 400, 70 into 400, 28,000, 28,000. Then what's the expenditure you got? This is over. Wages, how much? 20,000. Wages, 20,000. Then what's next one? Wages over. Manufacturing expenses, 10,500. MFG. Manufacturing expenses, 10,500. So the totally becomes 900. By weight lost, 5% on 900 units. So 830 plus 70 is 900 units are there. So it works out 45 units, no value realization. By scrap, 10%. 10% of 900 is 90. So what's the value realization? 90. It has been sold at rupees 400. 90 at rupees 400. 36,000. 36,000 is there. Then we close this. We'll go to working note. Working note number 1. Particulars, units, total input. You can say that 830 plus 70, 830 plus 70, this is 900 minus weight lost, 45, it becomes 855 minus scrap, 90, this is 5, 865, this is normal output, this is your normal output is there now. So 949, 765, 765 minus actual output, minus actual output. What's your actual output now? 780. More is there. We require how much? 765, but output is 780. How many units more? 15 units, which is called abnormal gain. So 945, 850, 90, 765 normal output. 765, but actual output is 780. How much more? 15, which is called abnormal gain. Working note number 2. Total expenses. Total expenses. Come back here. This is 2,98,800. 2,98,800 plus 28,000 plus 20,000 plus 10,500. So 3,57,300. 3,57,300. 3,57,300 minus amount realized. Minus amount realized, 36,000. Deduct 0, 0, 3, 1, 2, 3. This is 3,12,300. You got 3,21,300. This is called normal cost. Working note number 3. value of abnormal gain, more is there. Same formula. Normal cost divided by normal output multiplied by abnormal gain units. What's your formula? Normal cost divided by normal output multiplied by abnormal gain units. What's your normal cost? 3,21,300. What's your normal output? 765 into 15. So 3,21,300 into 15 divided by 765. It works out 6,300 abnormal gain. So we'll go to 6,300. I think work out. Understand this. Same type what we did in the process A. Then this is abnormal gain. How many units are there? Abnormal gain 15 units, 6,300. Add the figure. This is 915, 2 lakh 98. First 2 lakh 98,800 plus 28,000 plus 20,000 plus 10,500 plus 6,300. 3,63,600. 3,63,600. 915. 3,63,600. This is 780. Then 3,63,600 minus 36,000. It will come 3,27,600. 3,27,600. This is by finished goods. Hope you understand this. So here in the first process we got abnormal loss, whereas in the second process we got abnormal gain. Method is it. So this is weight lost here. No amount have been realized. This is scrap 90, the amount realized here. So at the output is only 780. You got how much? 3,27,600. So we'll move on to next problem now. So this goes in favor of operating costing. We'll explain. A transport service company is running 4 buses between Bangalore and Mysuru, which are 140 kilometers apart. The seating capacity of each bus is 50 passengers. The following particulars were obtained from their books April 2. So these are the, so here in operating costing, all the expenditure has been divided into two groups. One is called fixed expenses or standing charges. Number 2 is variable expenses or running expenses. So, which are the two? In operating costing, we divide entire expenditure into 2 groups. One is called fixed expenses, or we can say that standing charges. Another is called variable expenses or running expenses. With the vehicle run, what would have been the expenditure? So these say wages of a driver is a constant. It will come under fixed expense or standing charges. Salaries of is standing charges. Diesel will come in variable expenses. Repairs will come in air expenses. Taxation will come in the fixed expenses, standing charges. Depreciation we put always in the variable expenses. Interest and other charges will come area. So actual passenger carried were 80%. So we have to calculate the passenger kilometers. Passengers kilometers, right? Passengers kilometers. Number of buses. into number of days into distance traveled into seating capacity. This we have to write. What is the formula? Number of buses into number of days into distance traveled into seating capacity. We'll go through the problem. Each bus made one round trip per day. Going 140, coming 140 means 280 kilometers. So number of buses, no, 4. Number of days in the month of April means 30 days. Distance traveled, going 140 kilometer, coming one trip, coming 140 kilometer means 280 into your passenger is 50 passengers. Carrying capacity is only 80%. This is 4 into 30 into 280 into 40. Will work out now. How many passenger kilometers will come? So 4 into 30 into 280 into 40, 13 lakh 44 kilometers. 13 lakh 44 passengers kilometers. So number of buses into number of days into distance traveled into seating capacity. Number of buses are 4. It's a month of April, 30 days. So 140 kilometer round trip, going 140, coming 140 is 280 kilometer. Seating capacity 50, but occupied is only 80%, means work of 40. Totally in the month of April, how many passenger kilometers will run? 13,44,000. Now you have to prepare the operating cost sheet. Operating cost sheet. Particular cost per month, cost per passengers. Totally how many kilometers run? 13 lakh 44 kilometers. Now we'll divide. Number 1. Fixed expenses. You go one by one. What is the first one? Wages of drivers, conductors. Number 1. Wages of drivers and conductors. Wages of drivers and conductors and cleaners, 62,000. Number 2. So this over. Salary of office and supervisory staff. Salary. You can write salaries of office staff. Salary of office staff, it will come 40,000. So this over, this alone come repair. Taxation and insurance. Taxation and insurance. Taxation and insurance, 50,000. Then division on interest and other charges. Interest and other charges, all fixed, 60,000. Add the figure. This is 62,000 plus 40,000 plus 50,000 plus 60,000. So 2,12,000 2,12,000. Total standing charges, so cost per kilometer, 2,12,000 divided by 13 lakh 44 kilometers. So it will come 2,12,000 divided by 13 lakh 44 kilometers. 0.115, 2 lakh 12,000, 2,12,000 divided by 13 lakh 44,000, 0.1577, 0.1577. Number 2, variable expenses. Slowly, what are the variable expenses we got? So number 1, diesel expenses. It will come 1,10,000. Diesel is over. Repairs expenses, repairs and maintenance 34,000. This is over. Diesel is 1,10,000. Repairs 34,000. Then depreciation 76,000. Depreciation 76,000. Add 76,000. So this is 1,10,000 plus 34,000 plus 76,000, 2,20,000. Total variable expenses. So cost per kilometer. So 2,20,000 divided by 13,44,000. 2,20,000 divided by 2,20,000. 2,20,000 divided by 13,44,000. 0.1636. Add this is operating cost, 32 paisa. 0.32 is your operating cost. Now, how it will work out? First, we divide the entire unit into 2 groups. One is fixed expenses, another variable expenses. Fixed expense remain constant, whereas variable, if the bus runs, it has got an expenditure. If the bus does not run, there is no expenditure. It's called variable expenditure. So wages of driver 62,000, salary 40,000, taxation 50,000, interest 60. Totally 2,12,000 divided by 13,40. Cost per kilometer 0.1577. Whereas variable expenses, diesel 1,10,000, repairs 34,000, depreciation 76, totally 2,20,000 divided by 13,40 means it could work out 0.1633. If you add no, it is a 0.3 to 32 paisa it will work out. Hope you understand that. I have gone through very slowly 3 problems I have solved. One is contract account, one is the process account, one is the operating cost. All the 3 problems will come in the examination of point of view. Slowly we go through. So here, number of buses, number of days, distance travel, seating capacity. One 5 marks question will also come. One 10 marks question will also come. So I have solved both the question and I give some hint for theories considered. So hope you understand that. Hope I have solved 5 marks question And also I mentioned different types of costing to be done. One is contract account. Second, I did the process account. Third, I did the operating costing. 10 marks question I have covered. All the three questions of the last year question paper I covered. Hope definitely it will help you. Please go through once again this one. Definitely it will help you from the examination of point of view. So before I leaving, no, I say once again, I will come back in the next session for 15 marks. The same question paper I'm going to do for 15 marks is considered. Please go through it. Bring the good result to the institution, to your parents, to your teacher. Definitely go through slowly. If you have got a doubt, you can make the comment on this. Definitely we'll get the answer to this. This is an examination of point to sit home. It's a corona period is also there. You can't go anywhere. Sit in the home, study properly, bring the good result, go to higher study, bring the good name to institution. Hope best of luck to one and all. Hope we'll go through this. So good luck to you. Thank you. Thank you once again. All the students know who have been listening to me. So thank you. On behalf of Vidhyaashram, we want to say that our students has to score a good marks. I appreciate. So if we go through this session, I have solved 10 marks question. I solved the 5 marks question. I've given some hints regarding the three theories considered. No, theories always we repeated theories. No, hope we'll meet in the next session with 15 marks. Till then, goodbye. Meet in the next session.